So let's give people some time to join in and then let's get right into the lesson. All right, guys. Cool. So, if you guys remember in the last lessons that we've done, we covered a lot of my strategy and concepts. But what I really wanted to cover now is taking a look at some live examples of how those are being used in the market. All right. And then I also want to kind of go over concepts that we use that kind of fine tunes what is a good entry and what isn't, because a lot of people struggle with figuring out, hey, is this trade worth it? Or is it just another fake out, right? So we're going to cover that as well. And we're just going to cover in general trades that we're taking in the live market so you guys see how these are actually being executed. Okay, cool. So let's go ahead and take a look at some trades that we've got. Okay, and we're going to start off with today's trade because I want to show you the difference of setups. And it's not always just one setup and that's it. Okay, and I'll explain kind of one by one what we saw on today's trade and then go into what we had last week, which was all one setup. All right. So if we look at the trade that we had today, all right, much more simpler type of trade that we usually take. Okay. We don't have any fair value gaps or anything that we're basing the trade off. But if you guys just take a look, okay, and there are parts of the market that are a little bit more intuitive. All right. What do you guys see on Tesla? If we have bad news that released early in the morning, we had news drop that the market was not reacting well to Tesla's delivery numbers. Okay. It said that Tesla was missing expectations for deliveries by about 100,000. Okay. So that's number one. On this setup, I saw bad news. Okay. And that's something that a lot of people miss whenever you guys are trying to trade is the overall kind of factors that play into the trade itself, right? News, data, important stuff that moves the market, right? So above everything else, I was looking at the fact that we had bad news. All right. So just to put this into perspective for a different strategy than what you guys are used to, this is something that I really take into account on a lot of trading days. Okay. Are we clear on that? Perfect. Let me get that set up. 1 second. Okay. So next time, if you guys are ever trading, a lot of people will try to go long on positions and think, hey, maybe we had a dip or it's a liquidity sweep or anything like that. A lot of times, price will continue dropping because we had a really bad reaction to news. Okay. Now, where do you see the news? There's a website called forexfactory.com. It's free. You just log on every morning. Let me set that up right here. You log on every morning. There's a calendar. It tells you every single day for the next few months when we're going to have news and when to be ready to go so that you're not messing up trades, by not knowing what's going on in the market. All right. So today's setup was really simple. I saw really bad news for Tesla. There is not really any possibility for buyers to step in off of bad news, right? So we're expecting more downside. So in the morning, what's the next thing that we look for? Okay, we have levels. All right, so let's write this down as well. If we take a look at the trade that we had today, it was literally just a level and price action based trade, right? I wasn't really looking for a fair value gap or anything like that. This was all levels. All right. Let me really quickly show you guys the trade itself so you guys can see. Okay, here we are. So we took that trade at 6:35, which was about 5 minutes after the market opened. All right. So what we were interested in, just to give you guys some insight into how I kind of worked through the only one trade of the day that we want to take. Okay. At 6:31, we're watching for puts. All right. And that is based on the news. Okay. The actual entry comes in at 6:35 when we see the rejection come in and price break through the low. All right. So we have those two things, but how do I avoid getting faked out? How do I end up in a situation where price doesn't break this low and then just immediately reverse back up? Correct? What do I do in this situation? So that is going to be focusing on the actual candle itself. Okay, and what we call this is price action. Now, a lot of people haven't really covered price much. It's something that people kind of just glance over. Price action is probably the most important thing you'll ever come across. Okay, so what is the difference between a break like this on this candle compared to a candle like Here, let's go on NQ and I can show you right now. What's the difference between that break and a break like this one? Okay, so in this case, we still took out the low, correct? But do you see the actual difference of the candle? In this case, you wick right back up. That is a sign that price is not respecting the level well and it's reversing. Is that clear? Do you see the difference between something like this where price gets a break and we just instantly reverse back up? Okay, focus on the actual candle itself. Does not get a clean break. You come over to Tesla, and what do you see right here? It is a full body red candle coming off bad news and a break of the pre-market low. Are we clear on that? This is a little bit different because it involves a little bit more of intuitiveness. You have to be kind of more, it's not really a setup, but you will find some trades that are going to be based on you specifically looking at the price action and taking it only based on that. Is that clear? So let me stop for a second and see if there's any questions on the Tesla trade for today. And then we'll move on to taking trades that were last week. All right. So let me look at the chat. Someone said voice is breaking. You guys can hear me normally? Just to make sure. Okay, perfect. Awesome. So you just took it after the break of the low. So you know how in most cases I trade a break of structure fair value gap, right? But in this situation, since you have everything else aligning with it, I took it on the break directly. And you'll take a look at the break of structure fair value gap setups in a second, which is what 90% of my trades are based on. But this was just an example today to show you how I trade, multiple different strategies and not just sticking to one the entire time, if that makes sense. Okay. So I did not base this trade on time. No, I rarely base my trade on time. The only thing I focus on with time is going to be as long as it falls in between 9:30, so in this case market open, until 11 a.m. Eastern time. So basically, as long as the trade falls in between this time frame right here, let me take a picture of that here. That's going to be about 2 hours, which is right over here. There we go. Okay. Do you guys see that? So I'm only interested in trades in between this time right here. Nothing else after that. Are we clear on that? Okay. So as far as time goes, I know some people have this weird thing where they say, well, I have to trade like exactly at 10 a.m. I have to take this trade or I have to do this. I don't believe in that stuff, to be honest. That's pretty BS in my opinion. As long as it falls in between the first 2 hours of market open, you're fine. Everything else is secondary. All right. Your RR is 1 to 2 or only or something else. Again, I don't focus on the actual RR itself. In general, it's going to be 1 to 3, 1 to 2 maybe, sometimes higher, sometimes lower. But focusing on the RR itself is nothing because let me tell you this, the market doesn't move based on what your RR is, right? It moves from one level to another. So if you're focusing on like, oh, I need to catch a trade that's 1 to 3 R, right? The market's not going to move based on your R, okay? It's going to move from, for example, today I exited at this low. And what was the reason for me exiting at that low is because we had the next key level, which was right down here, if that makes sense. So I don't really focus as much on like, oh, I have to exit at this specific R or this or that. I'm only interested in the fact that, whatever from here it is to there, as long as I'm not risking like, for example, let me put it into perspective like this. If my stop loss was all the way up here and my target was down here, obviously that's stupid, right? If I can get at least above 1.5, I'm fine in general. Okay. So only trade between 9:30 to 11:30. Yes. Only trade between those times. All right. Everything else is secondary over there. You can't trade before because obviously in options, the market is not open. And after that, it just starts becoming way too slow. All right. Best is to target previous liquidity. You're 100% correct. All right. You called earlier today that you had a SPY put on watch. What did you see that told you puts on SPY? So I watch a lot of different setups throughout the day, and I usually don't end up maybe taking some of them, but I just keep them on watch because, for example, today on SPY, we had a pretty strong push and price took out liquidity. So for me, I was mainly interested in that. But other than that, I just didn't really see enough follow through and to end up taking that setup. So was not the plan. But I do watch like 20 different setups throughout the day. All right. Your exit on that trade on Tesla was the 4-hour low. It was the 1-hour low, which I think it probably is the same one. Does starter only mean full size or something else? Starter only means this. If I'm going to enter a trade with, $5,000, what I'll do is instead of going directly in with $5,000 all at once, I'll do $2,500 for a starter. And if I do need it later, I will add in the other 2,500 on a average down. Sometimes I don't need it and I just play directly on 2,500 and that's all. Okay. Cool. So we'll answer some more questions in a second, but let's go ahead and take a look at some more trades that we had last week because I want to show you guys how I trade, these two different setups in different types of markets, how we execute on them and everything like that. All right. Let's come here. So we covered that today. Let's go ahead and take a look at, where are we? So where was our last normal trading day? It was on December 30th. Let's take a look right here. Okay. So we had December 30th at 6:47. Let's go ahead and take a look at each of those trades one by one, kind of just walking you guys through. Hold on, I just messed this up. Kind of just walking you guys through why I take these trades so you guys can see what's going on. All right. Delete this off the screen and come back. So this is on the 30th and we had, let me check. Okay. So let's cover these one by one. Hold on one second. I think I messed up the days. No, we did trade on the 31st too, I believe. Hold on, I just mixed up the dates. Okay. So yeah, we started trading on the 26th, 10th of the year. So we'll take a look at each of those trades starting from then. All right. So let's go back to 26, 27 and take a look at all those trades from last week and then work our way over to the 30th and 31st. So on Friday, the 27th, right? We had one trade that we took, which was on Tesla. Let me real quick show you guys the setup itself. Let's go back to it. On the 27th. Here we go. Let's reset that. Here we go. So once again, all right, in this case, we didn't have news necessarily, okay? But what was I interested in this scenario on Tesla? All right. We understand that the end of the year is coming and the market is not getting as much buying, right? So I'm currently biased towards the downside. All right. Now, the first thing I do when I come in the morning, all right, just to show you a little bit of difference from the other Tesla trade that we had. First thing I do, no matter what, is I go on the 1-hour time frame, okay, and we find levels. So let me our levels, okay. So you're gonna go on the 1-hour time frame, and really simply just mark out what's our high, what's our low, everything like that, okay. Let me draw this back to the 27th. There we go. So if we take a look at the 27th, all right, and the pre-market. So we have a high right here, okay, in the pre-market, and we have a low right here. So nothing else, okay? We're just coming on the 1-hour time frame. We're marking out our levels. Everything else is secondary right now, all right? Next thing you do, you have levels on the higher time frame, meaning the 1-hour level. We have them all marked out, okay? Now, I drop down to a lower time frame. So let's start off on 5-minute, okay? I start off on the 5-minute, and I have my level set. Okay. I look for a key break of either of these levels, either the high or the low. And in this case, we took out the low, correct? And we got a pretty strong break. So my main interest right now is going to be a break to the downside. All right. We want to see continuation to the on Tesla. All right. So number 2 is going to be waiting for a break of the pre-market levels. Okay. That's number 2. All right. So we have the levels figured out, and we have a break of those levels. All right, are we clear on that? Perfect. So Next thing I look for is a fair value gap or something that indicates that price wants to move lower, right? So it could be price action or a fair value gap or both. All right. So I'll look through multiple time frames. I'll work my way down from, 2 minute, 3 minute, whatever it is. Okay. In this case, we had a setup on the 2 minute mainly. Okay. And we also had one on the 1 minute right here. So this trade I took on the 1 minute setup right here. Let me also show you guys the entry. Here we are at 6:39 a.m. on Tesla. All right. Why am I taking this trade? I think you guys can already tell, you can already see what's going on here, but you see the break of the pre-market low, and then what do you have? You have a fair value gap. Okay. So basically everything I need for this setup, we have it complete right there. Okay. It's very simple. I'm not really doing anything crazy. It's just break of the 1 hour levels. And then where'd that writing go? Hold on. Give me a second. Here. So we break the 1 hour level. All right. And then we look for a fair value gap. And the reason we wait for a fair value gap, okay, is because we want to see a pullback instead of rushing that entry. Are we clear on that? So when I see that break and then the pullback into the fair value gap, this is where I'm eyeing my entry. Okay. If you take a look right here on Tesla, what do we have? We have exactly that same exact thing. Okay. Price comes in, gets a nice break, and then pulls back into the fair value gap, and that's where we enter. Is that clear? I know we've covered this a few times, so you guys should probably already be seeing these setups really well. Okay. It's very, very simple to really see it. Okay. Now, there's nothing crazy. There's nothing that I'm doing that's really difficult here. But a lot of times, what people do get faked out on is they get scared out of the position. All right. So, for example, let's say I'm in Tesla right here. Okay. You need to understand one thing, which is if it's not hitting my stop loss and it's not hitting my target, nothing else matters. Okay. A lot of people see like one green candle and they're instantly out of the trade. Okay. That's obviously not going to work. You're going to just keep losing money like that. You need to let it go until it hits a target or a stop loss. Okay. Are we clear on that? So we have everything figured out. We have the actual entry figured out, correct? We have our, let me make my way back here. Okay. We have the fair value gap entry. We have everything figured out. But what we don't have so far is where we're exiting. So we have the entries set. Everything's good to go. Okay. But I don't know where I'm exiting. Okay. So what I look for in this scenario is I look for the next lows after price broke this level. Okay. And what we can see is right here is the next low that we have. Right here, we have a fair value gap. So no lows. Next one is right down here. Okay. So this is ideally what we're targeting for the exit on that trade. Now, obviously, throughout the way, you can scale to kind of just mitigate that risk if it's a little bit far away. But the general idea is that we go for a fair value gap and then we target the next low. Okay, is that clear? Let me see a quick second to take some questions on that and see if people understand. Okay, how do we spot a fair value gap? It's a little bit complicated to explain, but check out my YouTube. It has a full video on it. It'll explain what it is, how it works, and everything like that. Okay. Do I enter as soon as the candle enters the fair value gap? No. That's a really big misconception that people have, because what happens a lot of times is you might have a fair value gap that forms, and I'll show you like this. Okay. Let's say you have a fair value gap like today on the video. All right. And if price does not respect it, there is nothing for me to do there. All right. Let me see here. If it comes into the fair value gap like this and it shows me no reaction, like we just completely break through it, obviously I'm not interested in it because that shows me that sellers are not strong. Okay. I need to see something that shows me a sign that, hey, sellers actually respected the fair value gap. And in this case, this large rejection candle is exactly what I needed to see. Okay. In this scenario, there's nothing. It's just a strong green candle, price is holding, it breaks through it. There's nothing there. Okay. I'll show you another example here in a second so you see what I'm talking about. Let's say right here, okay, you have a bullish fair value gap. All right, obviously there isn't a break of structure or anything here, but let's say you want to take this. It's not a strong enough one for me to be like, hey, this is a good reaction. If you compare this one, it's just wicks inside that fair value gap, nothing clean, compared to a crazy drop like this one outside of that fair value gap. That's what we want to see. Okay, you're not just trying to rush that trade just for the sake of, hey, let me just enter. Okay. All right. Let's see what we got here. So you enter as soon as the fair value gap respects. Yes, right as I see my first sign of respecting that, hey, we got a good rejection. That's it. Okay. So for me, that's all I really need to see. If I see a strong rejection, meaning that price got a good rejection, that's all I care for. If it was on this candle, I would not take it right here because it's not showing me a reaction at all. So I need to wait for price to come in, reject, and then 639 is where we get that entry. Okay, so if we take a look right here, 639 is where we entered. 639 is right on that candle's open. Okay, so I wait for the confirmation. Let me get a little bit worse entry. It's okay, but I'd rather be sure. That's ideally what I want to go for. Okay, does that make sense? All right. The stop loss for the fair value gaps, that's a good question. So what I do with the stop loss on these is that I go for the high of the middle candle. So let's say we have a fair value gap like this one. Okay. And I'm taking a trade right over here. Okay. I'll go for the high of the middle candle. So not the first one or the third one of the fair value gap, but the middle one right here. So I'll go for the high of that right here. Okay. That's kind of what I use as a general rule of thumb. That's the best way to go about it. So for example, this setup right here is also perfect, right? You have a clean break of the low. Okay, you see how it's a strong break. It's not a break where we just get an instant reversal back up. This is a really nice break of structure fair value gap setup too. They're both very clean, correct? These are both very, very nice. Does that make sense? Do I exit a position at limit or market? Mainly market. I rarely do limit. There's no reason to do it, to be honest, because limit orders, like an extra 2 cents is not going to change my life, and me risking missing the exit on that trade is not going to be worth it. Okay. Does the fair value gap apply to any price stock? Yeah, in most cases, as long as it has volume, meaning that it's not moving like I don't know, like just totally on dead volume. That's all that you really need. Okay. So far, is everyone kind of understanding what the break of structure fair value gap is? Right. We have the entire rule set right here. Let me show you guys again. If you guys want to kind of write that down or take all of that here. Okay. So you have the 1 hour levels, break of one of those levels, and then you have a fair value gap entry, and your target is going to be the next key level. Okay. So simple things like that. I'm not really looking for anything crazy. Like I'm not really interested in, I don't know, some people take 10 o'clock, they try to short this, they try to do long like this, all that magic stuff. I'm not interested in that stuff, to be honest. Very clean, very simple. I just look for a break. I look for a pullback. If price respects, I take it. If it doesn't, we move on to the next setup. Okay. All right, guys. Do I use any indicators? No. Another big thing. Stay as far away as possible from indicators because that stuff is going to just mess up your trades as much as possible. Okay. Indicators are lagging for stuff. And second off, they just really don't make sense. I mean, like the market doesn't move based on, um, a line on your chart. Like if I add in, I don't know, some random indicator here, it's not going to move it. Maybe it might help you in some cases, like you might catch some normal trades, but in the long run, an indicator is not going to really make you money, to be honest. All right. Cool. So let's go ahead and take a look at another one that we've got. All right. And it should make a little bit more sense in a second. So we're going to cover again, like I said, these are all trades that I take live on call every morning. So for those of you that are in the calls, you guys see kind of what goes into it. But I want to do a quick review just to show you guys after it's already happened, why specifically, and go a little bit more in depth. Okay. So let's do this right now. We are on the 27th. So let's continue from there. So that was the first trade on, what's it called? The 27th. The next trade that we took was another put on Tesla, which I just showed you guys was this setup right here. Where are we? Let me come back to that, which was this one right here. This break of structure fair value gap right over here. So same logic here. I look for a strong break. In this case, it's market level. So it's not going to be as clean. This one, I'm not sizing the same way as I am on this trade. Okay. Because we broke a very important level here, and this is an intraday level. Does that make sense? So this one I took, let me kind of show you guys that. Where are we? We took it at around 7 o'clock, which is right here on this candle right here. So this same situation, I look for a strong rejection, which in this case, we got exactly that, and open the trade, okay? The next level was going to be, let me check what our next level was on that one. Was down here. I'm not sure if we got that full level, but I don't think we did. So we got a clean move close to it, but in this situation, it didn't hit my full target. So instead of getting a full return on that, where my exit was expected to be right here, I ended up exiting right over here after this fair value gap broke. So in this scenario, my exit should have been down here, but the trailing stop that I have, which is if a fair value gap breaks, that's where I'm going to be closing it. And that's where I ended up closing it instead of that target. Okay. So in general, those two Tesla ones were pretty clean. And it was just an example of how one is from a pre-market break and the other one is from an intraday break. Does that make sense? Okay. Let me just make sure you guys are following along and we can move on to the next trade after that one. Okay. Let's take a look what we have right here. How do you calculate your stop loss for options? So what I do is, like I said again, I take a look at where is the high of the middle candle, right? So in this case, you have the high of the middle candle is going to be right here. Only time that I do percentage-based stop loss is if, it's too far away. For example, if I was going to have a stop loss up here, that's going to be like a 40% loss. So I'm not going to do that. In this case, it's probably going to be like 10 or 15%. So I'm okay with that. Okay. I thought if the fair value gap is touched multiple times, it becomes invalid. So the fair value gap is valid until it breaks. Okay. If it touches it multiple times, it's not going to be as strong, but it still could technically work. It's just not going to be as strong as if it's the only first test. Okay. The strongest test of the fair value gap is this first one right here, this first one right here. Any of those ones that are the first one is going to be the ones that are the strongest. So this first one right here is good. This one's right here. They're all good. But sometimes you might have a fair value gap that tests twice before dropping. That's okay. Okay. It's not going to be like necessarily it's done. You know what I mean? All right. Someone asked, is this recorded? I'm not recording it, but I'm not sure if someone else is recording it. So there's a chance that this lesson is not recorded. So just keep that in mind, guys. All right. So if you're not taking notes, I would hope you guys are taking notes. All right. Let's see what we got right here. Perfect. So let's move on to the next trade of that day. And I kind of want to just walk you guys through because trading is something that's not as complicated as people want to make it. Okay. It's not something that I really need anything crazy for it. I'm just looking for my one setup or two setups, whatever it is per day. Whatever shows up, I take it. Okay. And the reason why I'm walking you guys through all these trades is because they are actual live examples. Okay. Is that clear? So that was the second one that we took on the 27th. Now let's move on to the next one. All right. Take a look right here. Okay. So on the 27th, the next trade that we took was on Amazon. All right. So on Amazon on the 27th, let's go ahead and take a look at what that trade was and see overall what we have. Okay. And it's a very simple formula that you match to almost every single ticker. All right. Here we go. So take a look right here. Here we are on Amazon. All right. And we want to start off with the same exact thing that we were talking about earlier. Okay. For Tesla, what do we do? Really quickly, we have it all written down right here. So I look for, oops, what did I just do? Hold on. Let me set that up. Okay. So with Tesla, what were we just talking about, guys? Okay. Very simply, I look for 1 hour levels. So let's go ahead on Amazon and take a look at the 1 hour levels. What do we have? So in this case, we have a pre-market low that was sitting right here. Okay. And we had a pre-market high that was sitting right over here. All right. Now, that's step number one, correct? We find our 1 hour levels. All right. Next thing I look for is a break of the 1 hour level. In this case, we get our break to the downside. So I'm expected to go for trades to the downside. Is that clear? So now what I'm looking for is a fair value gap. We have that break. We have that fair value gap. We had one right over here on the 1 minute. which never ended up coming back to it, so I didn't take that trade. Okay. What I did end up taking next time was the 2-minute fair value gap. Was it 2-minute or 3-minute? Let me check. The 3-minute fair value gap right here. Okay. So the fair value gap on the 1-minute didn't end up testing. Okay. It didn't come back and test it. So I didn't take this one right here. Instead, what I took was this 3-minute fair value gap right over here, which if you guys can see, what is it about this setup that looks really clean? Okay. We have the fair value gap test. Okay. Price ends up respecting and rejecting on this candle and this candle right here. So either of these two are good to take an entry on. Okay. Are we clear on that? So I just need to see something that shows me that, I'm sorry, just almost choked on my gum. About to die live on stream. So, what's it called? We see the rejection and we take that entry. Okay, so we just covered 3 of these steps. And what's the last step that we have? Which is the 1-hour levels for exiting the trade. And in this case, we had our next low after that fair value gap down here. Oops. Okay, so let's come back to that. And I want to show you guys something in specific so you guys understand what I'm talking about. So my main target was right over here. All right. What I really want to focus on here is that the trade ended up running another extra, I don't know, 50% after I exited. Okay. We don't care for that. We could not care less what price does after our target. We're only interested in getting our price from point A to point B. That's it. It can go 5,000% for all I care. If you have 1 runner or 2 runners, that's fine. But your main goal is to just get point A to point B. That's it. Nothing else. Okay. So whenever I see people say, oh, I sold too early or anything like that, your job is not to catch this entire move. That's not what we're here for. We're just here to catch from fair value gap to the next level of liquidity. That's it. Okay. Is it starting to make a little bit of sense? Let me see real quick. Perfect. Perfect. All right. So does this work in crypto also? Look, crypto is something that's, if you want my brutal, like honest take on it, crypto's stupid because you don't have, let me tell you this. These are actual markets that are being traded with like, you know, tons and tons of liquidity every single day. There's like trillions of dollars being flowed into this. Unless you're trading just Bitcoin or Ethereum only, which I don't see the point of doing Bitcoin and Ethereum only, like compared to futures or equities. There's no point. But if you're trying to trade like lower volume, like meme coins or anything like that, these definitely won't work because those are just random things, you know? All right, let me see right here. So if the candle wick breaks through the fair value gap, but still respects it, you still don't take it? Yes. So if it breaks through the fair value gap, okay, I don't take it. So it can, let me show you an example for this case right here. I think we had one today on Q. Let me show you guys real quick. Here, for example, right here. So price breaks the fair value gap right over here. Okay, it comes and it breaks, and then it ends up respecting. This means nothing to me. Okay, because it already broke. It's no longer valid. All right. I only care if it hasn't broken yet, and that's really it. If it breaks and it still reverses up, I don't care. Okay. We're only focused on the setups where it hasn't been really invalidated yet. Okay. Perfect. But do you guys see, it really isn't anything too crazy right there. Okay. We're just looking for a simple setup. And if you guys, again, like I said, you're on the live calls, you see the live trading. By the way, whoever hasn't been on the live calls, I have 2 of the sessions recorded. So if you guys want to walk, or actually not walk through it, I'll say, let me think. I was going to say let's walk through it on the call right now, but it's going to take like 2 hours to cover all that. So if you guys want a recording of the live sessions that we had, I'm probably going to upload it to the announcements or somewhere like that. So you guys can watch the trades as I'm taking it in real time. Kind of makes things a little bit easier to understand. Okay. All right, let's take a look right here. From next Monday, do you think the volume will go back to normal as it was before the holidays? Yeah, in general, the 2025 trading sessions are looking crazy good. Like, for example, today was a really amazing day. So it's already starting off the year really well. But I think this year is probably going to be the best trading year that we've had since 2020. I think this is going to be the best year possible. So we'll see. Okay. Here, let's see. How much longer will this live session be? We're going to be on here for about another 30 minutes, probably an hour. Okay. How can you watch the video on your live trades? So I'll upload the recorded ones and the announcements, but for the one that's live every morning, just hop in the free trial. It's 7 days. Hop in and just take a look at the trades as we take them. Okay. So if you're not already in there, take advantage of it before it's gone. All right. Will there be another account challenge? I was thinking about it. I think we might do it sooner or later, but let's see. All right. Cool. So let's continue into the next trade that we took right there and see what we had. All right. So that was the Amazon one. Let's take a look at the one after it, which was, let me see. Now we're going to take a look at the losses too, so you guys see how I manage the losses as well. All right. It's not just always going to be wins. Okay. So we took another one right here, which was on QQQ on 12/27/702. So let's go back and take a look at this trade as well. Okay. So one more thing you guys want to notice is that these are on all concepts pretty much. It's not like one specific concept and that's it. Or not concept, sorry, ticker. I'm trading it on QQQ, Amazon, Tesla, NVIDIA. Works on pretty much everything. Okay. So same thing over here on QQQ. What are we taking a look at? All right. First thing we want to do, as always, with any trade that we take. Here, let's cut this down so we can go to 1 hour. First thing I look for is our pre-market levels. If you come over into this session right here, we have a pre-market low right here, and we have a pre-market high right up here. Okay. What direction does the market break? That is the first thing that we want to take a look at. In this scenario, the market is coming down and took out that pre-market low. Actually, the pre-market low is right here, if we take a better look. But either way, we broke to the downside. All right. So that indicates that price is weak. That's number one. So we got the break of the pre-market levels. Now we look for a fair value gap. Okay. Where do we get a fair value gap entry? Over here. Okay. So we're taking a look at the 1 minute. I don't really see much. Do I take a look at the 2 minute? Nothing really there either. So the best setup in this scenario is either this fair value gap, which I didn't take on this one, right over here. So that was one that you could have potentially taken, but I didn't take that one. But the one that I personally took was this one right here, okay, on this rejection. Now, why did I take this trade? We got a great break of structure, and focus on the candle one more time. Do you see how strong we broke that low? It's not like some random candle that, like I said, if we break this high, just to give you an example, we broke this high, but it's just a wick. It's not a strong candle. We don't want to see that. Okay, we want to see a strong, clean break in the direction that we want price to go. For example, right here, that's exactly what we get. Okay, the next fair value gap that price retraces into, that is the one we take our entry off of. Okay, in this scenario, stop loss is going to be right above the high of the middle candle, and our target is going to be at the next low that we have. Right, in this case, I think it was right here. Okay, so just to give you an example, we have the fair value gap, you have the stops right at the high, and then you have your target from the 1 hour level. Okay, are we clear on that? I don't know if I'm kind of rushing through it or if you guys are understanding it, but basically it's just 4 steps that I follow through on pretty much every single setup. Okay, I go through, I take a look at, hey, do we have the levels? Okay, I have my fair value gap. Do I have price respecting it? That's all I look for. Okay. Can you repeat that? Yes. Repeat the setup, correct? So make sure you guys take a picture of that because this is basically what I trade. 1 hour level, break of those levels, fair value gap, and exit at the next key level target. Okay. So if you guys want to take a second and go through that. Why not take the previous fair value gap? Because the one that respects is the one I go for, right? For example, if price didn't respect this one right here and then just disrespected it and made its way back up to this one, I'll take this one instead. But in this case, price came into it, respected very nicely, so I'm good to go. Okay. If we would have a candle like this, for example, if we had a scenario where price would have reversed into the fair value gap and just completely taken it out, obviously we're not going to take that, right? But in this case, rejected, we're good to go. Okay. What trade did you take this morning? I posted a trade recap in the trade recaps channel. I'll go over a little bit in depth on that one. Okay. Let me see what we got right here. Still don't see how to find the 1 hour low from the previous day. So very, very simple. Finding your 1 hour level is very, very simple. You literally just go on, you look for the next key level that price has. So in this case, let's say I'm just looking at every single levels on the, actually, hold on, wait. Yeah. If I just take a look from this point onwards, if I were to target a next low, it's going to be the lowest point, which is right here, the next pivot low, and then I'll target the next one after that, which is down here. And how am I finding these levels? Basically, when we have a strong reversal from a certain point, I'm marking out the high and the low. So in this case, you have a high right here where price had a reversal from that high. That's a pivot high. If we had a strong reversal from price, moving higher after a downtrend, that is a pivot low. In this case, we had a little bit of sideways price action and then a strong move upside. That is going to be a pivot low. Okay. Same thing over here. We have sideways movement, strong reversal change. This is going to be my pivot high. So very simple. You just look for any case where price had a strong reversal to either direction, mark out the high or low. That's going to be your targets. Okay. All right. Perfect. So let's take a look at a few more trades, guys, and kind of just cover everything. But see what we've got right here. Where are we at? So we're on the 27th. Let's take a look at some more trades. Okay. So we had one more, I think, on the 27th. No, let's move on to the next day. Let's take a look what we had right there. So on the next day, we had the 30th, which was SPY right there. But before I go into there one more time, there's a lot of questions coming in. Let me take a look at what we have. Okay, what do we got here? Do I account for daily candles? Occasionally I do, but most of the time, like 99% of the time, it's going to be 1 hour. The only time I use the daily candle is if there's no levels at all on the 1 hour, then I'll move on to the daily candle. Okay. Cover or loss, we're getting into that. For last week, it was 8 out of 9. So we lost only one trade out of 9. So we are kind of just making our way towards it right now. See what else we got right here. Do I watch levels only on the 1 hour? It's honestly the same thing because these prices, if I go on the 1 hour, for example, and I also go on the 2 hour for Tesla right here. Hold on. 2 hour. Okay. If I go on the same thing right here, it's the same high. So it doesn't necessarily matter which level you're taking a look at because 1 hour is the same thing. So is the 4 hour. So is 1 hour. So the 1 hour is just good because you have a little bit more data on, like individual highs and individual lows compared to the 4 hour where, you might not see this high as well. Let me show you that right here. You might not see this high as well as you would like on the 1 hour, for example. Okay. So that's why I prefer the 1 hour mainly. That's the best level in my opinion. Would you consider this valid? 1 hour to find levels, 15-minute for market direction or overall trend, 1 to 5 minute for entries. That is absolutely perfect. Don't need to change anything on that. So if you have that kind of as your plan, that's perfect. Okay. That's a very, very good plan right there. The go. I learned it from you. That's all you, my man. You figured that out yourself. If there's 3 or more fair value gaps, then what do we do for it? For example, look, let me give it to you like this. In this case, 2. Okay, whichever one respects is the one I take. You have to wait, see what this candle does, and then enter. Okay, If you have 3 fair value gaps, and the first one doesn't respect, the second one doesn't respect, and then you get the third one and that one respects, then you take the one that ends up respecting, meaning that price actually shows follow through. It's not like, again, in this case, you have a candle come in, wick hard, and reject very strong. Over here, you see zero reaction. Price just comes in, strong green candles every single way. There's nothing for you to take right there. Okay. So you could have 20 fair value gaps, right? But if they're not respecting, that means nothing to us. You could have 50. Okay. All right. So let's take a look. Actually, let's take a look at the one loss that we had from last week. Let's kind of cover that real quick because the rest are pretty much wins and it's the same setup. But I want to kind of cover how we lose as well, so you guys can see how we do that too. Let me see where our loss was. It was on the video 133 puts at 642 on this day right here. It was right over here, I think. Let me come back to that. So the trade that I took personally was this one right here. Okay. So on this, we have A plus setup on everything. Let me remove all the drawings. Okay. And what we have is everything looks perfect, correct? You have your break of structure right over here. Okay. You had the pre-market break right over here. Okay. Your pre-market low broke right here. And then everything is all good to go in this scenario. You also took out the low. You have a really nice fair value gap right over here. Okay. So price respects on this candle perfectly. If you take a look at QQQ, exact same candle that we have. Okay. And exact same candle right here too. So everything on this setup looks good. And then price just comes and hits the stop. Okay. So what went wrong here? And the answer is absolutely nothing. Okay. There are cases where you take a perfect looking setup and it's going to fail. And that's the case with any strategy you trade. Nothing is ever going to work 100%. Most cases, they're going to work like 70. 70 is a really high number, actually. I think most cases, you're going to get like 60 to 70. So you only need it to work on the ones that are 70% at least. So, for example, any strategy you trade, you're going to have ones that have a perfect setup and it fails, right? This one on the video was a perfect setup and there really wasn't anything that I'd say was causing it to fail. It's just a matter of price didn't end up respecting, right? It could have been buyers maybe stepping in at 135.73 that we didn't see, or if it was too choppy. And I guess it was New Year's Day, so that's potentially a reason why it was too choppy, but there's just nothing you can do about it, okay? So it's not your job to focus on the 3 or 2 out of 10 that lose. It's your job to focus on how you manage these, okay? If I take this trade and these ones are all winning, okay, but then I come into a loss and all of a sudden I'm not respecting stop loss, or I'm placing stop losses all the way up here and not respecting levels and everything like that, you're not going to make money. There's just no way, okay? But the way I trade is whatever happens, happens. If I lose it, move on to the next one. Who cares? Okay. The wins, we respect the levels for targets, and for the losses, we respect levels there too. Okay. There's just nothing you can do to avoid losses. It's going to happen no matter what. Okay. You just have to respect the levels, because I see a lot of times people have, people kind of rush the trade, and then whenever they start seeing some red, they start panicking, right? And this is something that I think a lot of you can also say that you've done in general, because it's something I used to do when I first started trading. Was I would see a little bit of profit and sell. So for example, like I would see, I don't know, this candle right here goes slightly into green. I'm selling, right? I'm taking my profits because I'm scared. I would also hold this trade through stop loss because I don't want to sell for a loss, right? If you do any of those two things, your account's going to get destroyed in no time. Okay. The only way to be profitable is respect either a loss or a target. Everything else before that or after that, we could not care less for. Okay. If that makes sense. So only use the fair value gap that closes with a wick within the fair value gap and not out correct. Also thoughts on fib with premium and discount to see which fair value gap will hold. So yes, in order to enter a fair value gap, it can break. And ideally we get a wick right here. We get a wick right here. That's going to be perfect for us. If it breaks and then comes back into it, we don't care. Okay. We only need it to be inside the fair value gap, respect, and then we can enter if we want to on that breakdown right there. Okay. Your platform mentioned a VIP option where profit is guaranteed. Can you explain more? So that one's completely full, probably until July. But when the time comes around, I'll actually hold on. Let me see if I have the. No, okay. So I'll just do a call going over that specifically what that is. But until July, those are full completely. Okay, because it takes a little bit of time to explain that. All right. So basically you guys get to see not every trade is going to be a win. Majority of them may be, but the idea is that if you respect your levels, you can literally be profitable with only a 20% win rate. Okay? It doesn't matter about, doing anything crazy. The only time that you guys will lose is if you don't respect these levels. Okay? That's honestly the main thing. If you guys are respecting them every single day and taking clean setups, you're fine. The moment you start taking profits too early, for example, I don't know, you exit like 1% or 2% in profit and then you sell for like 30% loss, you're not going to make money that way. No matter what happens, you have to respect the levels on both ends. All right? Perfect. Perfect. So, 2025, guys, the year's starting off strong. You guys have the guide and everything that you need to get these trades going. All right? You have everything you need. All right? The main thing right now is making sure you guys can actually follow through on it in live markets. That's number one. And the second thing is making sure that you're not just going totally out of your plan and just messing up your stop losses and targets. As long as you follow those two things, you're going to be fine. Okay? Is that clear? Let me also check down here. We have some questions. Perfect. Quick question. I can't be in the call, but on marketing or on marking the pre-market 1 hour levels, do wicks count or not? Yes, 100%. I actually mark out the wicks mainly, not even the body. So mainly the wicks are what we go over. All right. Let me also check this chat because I was checking this one only. Let me see what questions we had right here. When is the free trial ending? The free trial ends January. When is next Saturday? Hold on. January 11th. So if you've already claimed it, then you don't have to worry about anything. But if you haven't already claimed it, January 11th is your last day. After that, it's going to be gone for a long time. All right. What else do we have here? So someone also asked, how can you deal with respecting your levels and not selling before the trade? So in general, I would say it's something that comes with experience, right? You're just not going to get it unless you just keep trading and just getting experience because emotions are the hardest thing in trading. And honestly, if you don't follow through with, just respecting your levels, it's really not going to be good. So you have to kind of train yourself to not do anything and until price a stop or a target. If it's in between any of those areas, absolutely nothing matters. Okay? Just have to kind of train yourself and with experience you'll pick up on that. All right? How to claim the free trial? There's a channel called Free Trial up there. It's right above the profits one. I'm not sure if you can see it, but yeah, as long as you get it before January 11th, you'll have access. That's for those of you that haven't already claimed it. All right. Do I use market or limit orders? Forget limit orders. No need for them. Only do market. Okay. That extra 2 cents won't do anything, so it's better to do market. Do I not take any trades if the price consolidates inside 1 hour high and low levels all day? No trades at all. So if we don't have price respecting or breaking and respecting a level, then there's no trade for me right there. I'll sit for a week. If no levels are breaking, I'm not going to trade for an entire week if I need to. Okay. Would you please elaborate on how to recall the option price of the middle fair value gap when we are buying the call slash put? So we don't know the option price ahead of time, okay? Because options aren't directly correlated to the actual underlying. All we do is when the time comes, for example, I'm trying to enter this fair value gap. Whatever the price is at, I'm basing my trade off that. Now, in terms of knowing what price to be for stop loss, like at, I don't know, on the actual direct level right here, we don't know that. Okay. But if you notice that price is getting close to your stop loss and it's going way past 20 or 25% loss, just close it. Okay. If you notice that you have the trade open and it's only like negative 10% at your stop loss, don't hold it for negative 20%. Just close it. Just let the trade go. So we can't know what the option price is going to be. We just kind of have to adapt to it. All right. What do we got right here? Perfect. Let me take a look at these. So we watch for a 15-minute candle to do a clear break of 1 hour levels. So it doesn't matter necessarily what time frame the candle that's breaking is. Sometimes I take the trades, for example, on Tesla, I took it on the 1 minute. On QQQ, I took it on 1 minute right there. Amazon, I took it on 3 minute. Obviously, the higher the time frame, the more likely it is to work out. But sometimes you'll see me take trades on the 1 minute. Sometimes I'll take it 5. Sometimes, it really doesn't matter, to be honest. Alrighty. All right, everybody asking for the free trial link. Let me send it in chat. Hold on. I sent it in the chat. So if you haven't claimed it, like I said, you have until January 11th. We're going to be live trading tomorrow morning. We're going to be back. Honestly, everything that's kind of... Hold on, let me see if that's sent. Yeah, so you guys should see it right there. So the market is now going to be moving fine. We don't have anything really crazy coming up like holidays or anything like that. So we're pretty good to go, I would say. Okay. How do I choose which option strike? So I usually just go for, honestly, like $1 or $2 out of wherever the level is. So for example, if Tesla's at, I don't know, let's say like 439 and I want to go for 438 or something like that, that's usually what I'll do. But in most cases, I just stick to like $1 or $2. Like that's kind of the range I go for the options contracts. Okay. When does market open for people outside of the US for stocks? So it opens at 9:30 a.m. Eastern time, which you can just put into Google. It'll kind of tell you what time that is for you. Would you consider doing free live Fridays or something like that? Honestly, I don't want to do like a separate live session, so that's why I just have the free trial, so people can just join in and watch along with people that are already in there. It's just a little bit too messy to do like 2 separate lives at once. So I think the free trial is way better to do it because you have people that join in, and I want you guys to kind of see what it's like to, it's one thing to watch the calls like for the lessons and see this after it's happened, but it's one thing for you to hop on the call and see it while it's happening live because it's like 2 totally separate things. So yeah, if you haven't already taken advantage of that, make sure to do so. He means basically just open the stream for free users, not premium users. That's what the free trial is for. Like I said, the free users, you guys can basically just access the premium side for a whole week. So it's 7 days free trial. You guys are able to access it fully. Do I only trade stocks? No, I also trade options, futures, but mainly my main thing is options. And then futures is like occasionally I'll do it. Okay. Awesome. So let me give you guys kind of an update on what the market's looking like heading into next week. Tomorrow's Friday, so actually tomorrow and next week. But This year is looking pretty crazy. Honestly, I've been seeing the market, how it's moving, and it looks like it honestly does look like what we've had in 2020, where it was just crazy run after crazy run. So I'm really hyped for what the market's going to do this year. It's going to be very interesting. I think we can get a 2020 type run this year. So I'm really excited for that. See what the market gives us. Honestly, the way we opened up today, insane. Already, like the price action was really clean. So I'm expecting heading into next week, we're going to have really, really good price action. So I'm excited for that. Ready to kill it. I think we'll see. Honestly speaking, what I think the best possible moves are going to be, let me tell you guys this right now. So what I think we're going to see on NQ is going to be a little bit more downside, probably until actually, never mind. I take that back. Depending on how price acts at this level, how this next 4-hour level closes, we can see a really, really nice reversal back up to 21,700. So depending on how this candle closes in 2 hours, I think this might start a new uptrend. So keep your eyes on that. Okay. But like I said, can be a fire year. And I'm starting futures trading, by the way, for all the people in the Discord. We're starting futures trading. Honestly, we might start it tomorrow. If you guys want, we could just start it up tomorrow. I was going to say on January 10th, but we'll do futures trading alongside our regular trades so you guys can get both. We could do futures tomorrow. If you guys are down, let's do both. We could do a funded account and a regular both. Intro to futures trading. All right, this is what we'll do then. Tomorrow on the live call, I'll also trade some futures with you guys for Friday. Let's do it. So not just options. Let's do futures too. Would it be in your normal alerts channel? No, I'm gonna do it in the futures alerts channel. So I want it to be like separate from what we're doing on the options, so people don't get confused. So tomorrow, be ready to go. I'm gonna see if I still have my old funded accounts. I'm not sure if they got discontinued. Hold on. Okay. I'll have to figure it out. But if I don't, I'm just gonna get a new funded account. And then let's be ready to go. What time is the live call? It is at 9:30 a.m. Eastern time. It's gonna be in the same channel that we do the regular calls every morning. So just hop in there. We'll trade futures and options both. Do you need a different account to trade futures? Yes. So the way I'm not sure if you guys are really familiar with funded accounts, but it's way better risk to reward because you kind of pay like only $16 for an account and you can get unlimited amounts of payouts in most cases. So it's way better in that sense. Options, you kind of risk your own capital, but it's also it's your own capital at the end of the day. You can do whatever you want with it. So we'll take a look at that. Okay, funded accounts are something that people are really interested in, and we'll kind of cover that. Okay, I'm going to do a full review on what a funded account is and give you guys a full class on that probably. Okay, I'll just let you guys know a write-up in the channel, on the Futures Alerts channel. Let me share my screen over there so I can show you guys where we're going to do those. But we were trading futures for a little bit of time. Let me see right here. Can everyone see the Discord? All right. So I'll be posting it in this channel right here. Basically the same way we alert the options plays. I hadn't really been doing options or futures that much, but in general, just going to be like this. For example, in NQ long at this price, whatever, going to be similar to how we do the other trades. But I was trading futures for a pretty long time, to be honest. And I love futures for sure. They're pretty sick. But we'll take a look at all of those. It'll be in this channel. I'll do a write-up today. It's going to be different from what we do with options. Like totally different thing because you have, what's it called? Options are a little bit different, but they have the same concept in terms of how we trade them. We'll cover funded accounts soon. I'll do a full write up on that. Okay, I'll give you guys exactly how that works and everything like that. But in general, pretty simple to use. Nothing really too difficult there. All right, perfect. So that. Am I using Weeble for options? If yes, can you share what it looks like for quick in and outs? Yeah. Give me a second. Let me see. See if I can open up my Weeble here. I'll send you the video for what it is, how I set up my options. So send me a message. I'll send you over that YouTube video. I'm using Ninja Trades, but thinking of switching broker to the one Nitro Trades will use. So I'm probably going to use Tradeovate, the one through the funded account. I think that's cleaner than Ninja Trader. Ninja Trader is like stuck in the 1980s. Like platform is way too old. Tradeovate's a little bit easier to use, much cleaner. I don't have access to those channels. How do I get access to the premium channels? Free trial. Let me send you guys a link one more time for people that were in there. Do I need VPN to use Weeble outside of the US? It won't work at all if you're not a US citizen because you have to upload your social security and all of that good stuff. And that won't work if you're not a US citizen. Okay. Pretty crazy win right there. Perfect. Cool. So options on one hand, but funded accounts are something that we definitely should get into a little bit more. Let's see if people prefer that, to be honest, over options. A lot of people have been switching over to fundeds. So if you guys like that more, then we'll definitely get a lot of alerts in for that instead. Okay. I personally just like options more for my own trading, but we'll take a look. Let's see what people got. I have an account here in the US, but I can access while I'm abroad then. Yeah, so I'm in Dubai right now, for example. I can trade without a problem. I don't need a VPN or anything. You just have to be a US citizen. That's all I care about. I love futures. I do too. So yeah, let me go ahead and buy a few funded accounts, probably like 30 of them. Let me get the trade copier and everything. Let's see. I claimed the trial, but I don't see the extra channels. Guys, if you're signing for the trial, make sure it's the premium membership button and not that free access one. The free access is the role that a lot of people have right now, and they get it mixed up. But the premium membership is the one that's, it's two separate buttons. Okay, make sure it's the premium one. That's where the live classes and the live trading are on. If you do futures, can we still take the same for option? Yeah. So basically, if I take a short on NQ, you guys can just go with options. Same exact thing. Nothing to change over there. Okay. Do I have more information about futures in your YouTube channel? I'm going to go ahead and, what's it called? Get that all set up pretty soon. I'll do a full video on that. Nitro, if you don't mind, I can help members sign up for if anyone needs help, they can DM me. That's perfect. That's perfect, my man. That's awesome. So if you guys do need help, message me, message anyone that's a member. They'll get you guys in. Do I have any more content on CRT? I'll do, we'll probably do a lesson in the actual thing channel for the premium. We'll do a lesson on CRT covering all of that soon. Can you do a review on crypto? I don't really trade crypto, to be honest. I'm not the biggest fan. What would you say is more profitable, futures or options? Okay, so I'll tell you this. If you have larger capital, options. And I think the end goal should be options. But the good thing with futures is I literally risk $16. So in the worst case, if I was to lose like the entire account, I lose $16 or 50 or whatever it is. But my payouts can be 5,000, 10,000, 20,000. So that's why futures are better in a sense. They're much harder to maintain because they have a really tight risk management system, but it's definitely worth giving a try, I think. I heard something's up with payouts, like when people receive them. That's true. Some people really do have a tough time with getting their payouts because some firms are just really garbage. So I think you guys should honestly stick with like a few good firms. I'll let you guys know which ones are good pretty soon. Apex, I personally haven't had a problem with them. I know some people have been complaining recently, but they shouldn't have a problem, really. I have a question about CRT. Would it be the same as using the strat in higher time frames? It's similar. Um, Similar, but slightly different because strat doesn't necessarily target, or as much as I know, strat necessarily target like a previous low to the same extent that CRT does, or a previous high. But in general, they're the same idea. Yeah. Perfect. So this is what we're gonna do. We're gonna do more futures. I'm gonna get the accounts set up today. I'm gonna buy up like 20 of them, and then we're gonna get some futures trades. And if you guys want, you can literally do it today. Like it takes like 20 minutes. We can just get everything set up. Let me do some research and see what the best like trusted firms are because I don't want to do one where if I make like $50,000, they don't pay me out. I'll probably lose it. But let me make sure. Let's see what's good. Apex is really good. I personally haven't had a problem with them. Uh, My Funded Futures is another one that's good. Top Step is good. They're all pretty good. All right. Cool. So everybody ready to go? Tomorrow we're live trading again. We're pretty much back to back every single day, trading futures and options both. All right. Now we're adding in options or futures so we can get a lot more trades in. All right, guys. Awesome. Awesome. So I'll see you guys back or actually, hold on. Let me make sure I have this set up. Okay. Like I was saying, I'll see you guys back tomorrow morning. Let's get the live trading ready to go and then get a few options trades as well. Okay. And futures. Am I still active on YouTube? I'm going to be uploading a video pretty soon, actually. I've been traveling a lot, so I haven't had time to really make videos. But I'm going to have a new video coming out on YouTube pretty soon. All right, guys? Awesome. Awesome. So, everybody take care. Tomorrow morning, I'll see you guys in the call. All right, let's make some more money. Markets are starting off strong. It's going to be good. It's looking like a really, really good rest of the week and rest of the month. Awesome, guys. So, thank you guys for joining in. Everybody take care. See you guys tomorrow morning. All right, guys. Enjoy the rest of your day.